So as I was saying, I'd like to stand up in this session, if you don't mind, for a little while at least. And as they say, they leave the most interesting topic after lunch. So you guys are up bright, you had a nice lunch, you're not falling asleep, and the topic is regulatory frameworks, which is very, very interesting and not at all boring. So this morning we heard from all, the fintechs, the microfinance institutions, of the excellent work that is being done of leveraging technology for financial inclusion or for alternate finance or for reaching out to the unbanked. So they are leveraging that technology. But an important component of when you start to do that is what is the regulatory framework which is wrapped around all these initiatives. Because like someone said this morning, anything we do is regulated. It has to be regulated because there's several stakeholders who are affected by that. And that's what the regulator keeps in mind when they're formulating regulation, that how do you balance the permissions that they give, the licenses that they give, that each and every stakeholder can benefit from that, in our case, the technology. So that's why it is a very important component. The other thing I would just like to add, and again, all of us here are professionals and we've been in our field for several years, so we know this, but it's always good to reiterate it all the time, is that the regulatory frameworks never keep pace with the innovations. They never do. They're always catching up. And since innovations are made in the private sector and regulation is formulated by the governments mostly, it is always catching up with what is happening. And therefore, again, it was mentioned this morning, it has a lot to do with all the stakeholders interacting with the regulator. So I think that is a very important part of formulating a regulatory framework, that the guys, the people, the innovators, the fintechs who are trying to move the market have to interact with the regulator to understand what it is that they need to do so that all stakeholders are happy. So that's something we should always remember. And to discuss all this, we have an excellent panel over here. I'll just introduce them very briefly. But before that, this session is for 1 hour, and it's actually divided into 2 components. So the first component is current perspectives on policy and regulation of alternate finance. So we'll probably spend 30 minutes on that. And the second is how the governments can facilitate the growth of alternate finance, which is, I think, the more important. So to discuss this, we have actually an excellent panel and varied experience. So we have Gabriel. I won't attempt to pronounce their second names at all. He is the founder of a very niche bank in Italy. It's called Ethica Bank. And they are targeting market segments which regular banks do not target. And hence, the regulatory framework is not catching up with what he wants to do. So we'll hear from him what it is that he needs to be changed in that regulatory framework. We have Anna, who will then speak next. She's from the European Commission, and she looks after relationships with international financial institutions, with the EIC, with the EBRD, etc., on the financial sector, and what is being done in terms of innovation on that. So she'll speak about what is happening and what is the European Commission doing, especially generally, and then on regulations. But to carry the regulatory part forward, we have Piotr, who is actually working in the European Commission as well on the regulatory frameworks for these innovations. So what is it that the European Commission does, how they do it, what are the pitfalls, what are the problems that they face when they're doing regulation. And last but not the least, we have a lawyer amongst us. He's the owner of a law firm in Poland. And he spent a lot of time in working with the regulators in Poland, and I think in other countries also, on framing regulations around payment systems and other type of fintechs. So I just hand it over now to Gabriel, who will walk us through his very wonderful work that he's doing in the bank.
Okay. Hello. So now it's difficult because after lunch, talking about a bank is very, very, very difficult. So what I would like to say, just to start, is you turn to your left or to your right, where there is your neighbor, and you tell why you are here in 10 seconds. It's not so difficult. My name is Gabriele. I'm here because alternative finance can change the world. Just try. So we wake up and then we will go on with our exercise. So please don't be shy. And sorry for my English, for my Italian behavior, but okay. Yes, and nice to meet you, of course. Look, yes, for you it's quite difficult to see me as a banker. I am among the funders. I'm not the only funder because to fund a bank you must be mad, crazy, totally crazy. And we started in 1989 with a microfinance institution which was dedicated to fair trade organizations in Latin America, in South America, sorry. After 10 years, we founded our banks, which is fully dedicated to social entities, social enterprises, and we give loans to those organizations in Italy and in Spain, because we have one branch in Spain, not in Barcelona, but we have a bureau in Barcelona. It's politically correct. And we give loans to this kind of activities. Just spot the one at the left. Well, there are all social entities because culture, NGOs, not-for-profit organizations which deal with renewable energies. But the one on the left, I think that you may know San Cipriano d'Aversa or Casal di Principe. Maybe not. Corleone is more famous. But these villages are near Naples and are the capital of Camorra, which is the sister of mafia. You understand these Italian words? I think so. We work there and we give loans to those who are considered unbankable. Yes, it's a difficult job, but it's interesting. We give even to these kind of people who lost their job because the Italcables failed. We organized with Lega Nazionale delle Cooperative a sort of reorganization of the cooperative. Now, this is one of the biggest firms near Naples. It accounts for, come si dice, turnover of 100 million euros, so it's not a small one. The other are small, but it's quite big one. We evaluate our loans with social criteria, not only with economical and financial criteria. And we have members of the bank, volunteers, who, like in Oikocredit, go on the ground and control if those who will be our beneficiaries are trustable. I don't know if it's correct in English, but believable. One day, we will be asked if we were believable, not if we were believers. And look at the last two lines. 50% of the beneficiaries have been previously rejected by the traditional banks. 50%. But what is the good news? It's not us, but it's the University of Milan. Someone this morning was talking about the Catholic University in Milan. They spotted all the loans we gave in 15 years, in 2014, and they said that with this kind of track record, which is 1.8 billion euros, 1.8 billion euros, so it's not peanuts, given in this kind of activities, mainly to social enterprises, the 50%, we have this kind of results. So, I'm not here to tell you that we are brave, capable, and so on, even if I think that. But I am here to tell you that we do banking like the cooperatives bank, popular banks, and savings banks in the past. same criteria with the social criteria inserted in this evaluation. The results are today that our capital ratio, Piotr, our capital ratio is at 14%. So not so bad. We earn from our activity and we reinvest all the revenues in our activity. So we don't pay dividends. But we are growing up at a rate of 12% per year. When we started, we were 13 people, very crazy, mad people, in an apartment. Now we are 300 people working in Italy with 80 groups of members organized in Italy and Spain. And on June the 30th, the revenue of the bank was up to 2 million euros. So doing banking in this way is really important from the social point of view. 50% of people had been refused, but it is even rentable. So I'm not here as a businessman. I am a social-oriented banker. But what I say, it is possible to do banking a different way, and we can gain from that. That's it. Share capital is not a huge quantity of money. Savings is much more than 1 billion. Loans, 1 billion. And the asset management society of Banca Etica is at the 3 billion of collect. So, not peanuts. Thank you very much indeed.
Well, thank you very much. Very interesting work that you're doing. I just wanted to change the pattern a little from the previous panels. And I would like to invite some questions at this point in time to Gabriel, if you have any. One question which comes to my mind readily, and I think I'll ask the first question is, you seem to have done good work in these short years that you've been in existence in terms of your growth and in terms of your outreach and the quality of your assets as well. It's it's double as good as the average in the market. And this is despite not having a very conducive regulatory environment. So is there, if the regulatory framework was improved, is it you could reach out better? Is that the case in this bank?
Well, you have seen one of the figures was that the net default ratio on our loans is at less than 1%, like when the other banks in Italy are at 4.6. So giving loans in this way is as good results. Yes, we have the same framework, regulatory framework of the other banks, like Deutsche Bank, Unicredit, Intesa Sanpaolo, the big ones. What could be interesting for us is, and we were discussing with Piotr just 5 minutes ago, is that these kind of banks, because there is Banca Etica in Italy, but there are other banks which belong to the alternative banks federation, FEBEA, Crédit Coopératif in France, for example, and there is Triodos in the Netherlands. There are other banks which belong to a network which accounts for 100 billion euros of assets, so not so small group. Well, what we consider and we ask could be a new framework for this kind of loans, not for this kind of banks, but for this kind of loans, which means that all the banks which are engaged in this kind of activities should have the same capital requirements. Not for us, not for Banca Etica, not for Triodos, but for all the banks, in order to push all the system to make this kind of inclusive finance, like the microfinance institutions do, and like these social-oriented and values-based banks do. We have done in the past, we want to do it better in the future.
Thank you. Any questions from the very active audience? Please, Piotr.
I do have a question. It's quite elaborate. I don't know if it's going to be answered because that's obviously a business secret, but what's your secret sauce? Well, do you have a superior credit scoring, or do you rely on people suggesting somebody else? Where's the success stemming from?
The other one. Well, it's not a business secret, because if you go on our website, you will find how the evaluation of the loans is made. The principle of transparency for us is important. And all the loans we give are on our website. So the other banks spot the name and say, well, Banca Etica 200,000, so we will go 400,000. Why? Because we have members of the bank who go and with a sort of questionnaire, they ask some points on democracy inside the organization, on how they stay on the ground, how many volunteers, how is the social impact of this activity. This is a way to complete our financial and economic evaluation.
Thank you very much. So we'll move on to Anna, who will probably resolve the issues that Gabriel has, or at least tell us how they can be resolved. Please, Anna, go ahead.
Well, that's a challenge. Let me start with a personal statement. Gabriele, what am I doing at the European Commission? I should be doing something like that. I'm most impressed. Coming to the introduction, for this is coming back to me. I did a little bit of work in social finance, microfinance in the past, mostly as a volunteer. So my heart has always been in it. And I'm going to tell you why my heart has always been in it. I met with the legend. It's very often that at a certain tender age you fall in love with people you read about, and this was my case. I fell in love with Muhammad Yunus, and I met him in person, and he said, and he's a sort of incredible person. When he looks at you, you know you have to change the world. It's your duty, yeah? And he said, so much innovation today has been invented in science fiction. We have to start writing social fiction, and then we have to do it. So it feels like, it's very important that we take our imagination to what might be, however impossible it might seem today, and then we do it. You introduced the European Commission in the context of regulation is a common mistake. There's a great belief that the US innovates, China imitates, and the EU regulates. But we do not only do that. We do some other things. Would you pass that to me? Thank you. Okay. We actually reflect a lot about what are the key drivers and key constraints to development, both within and outside of EU. And the social business discussion at the Commission has always been there. And before we regulate anything, there's a political discussion, very often evidence-based, with all the limitations to evidence bases, to understand why certain developments need to be supported, why certain networks need to be encouraged and financed, and why bringing people together and making sure that they learn from one another is so important in Europe. We do try, sometimes it may not be evident, to actually react politically, in regulatory sense, and in finance, to the developments that we see on the market. It is only on the basis of that we bring people together within the Commission, very often across different sectors, across different legacies. We involve people in member states, we involve people in the European Parliament to see what is the context, first the policy context and the political context, to actually support other things with either financing or regulation or some sort of accompanying measures. My experience is in finance, and I have always worked with financial instruments within the Commission across a number of different sectors. And the crowning of our activity in finance is the investment plan for Europe, which was launched in 2015. It brings the best features of financial instruments that were tested and piloted over the last decade. And it covers all sectors, so it's more prone to innovation inter-sector, and it has a very strong, very powerful technical advisory and sort of awareness building component to it. It is part of a global sustainable development agenda. So we try to make sure that we are networked into the global activities, into the rule-setting areas, such as discussion at G20 and G7, to make sure that social investment, impact investment, fintech, all these areas are coherently treated and regulated across different geographical areas. In terms of financial instruments, my colleagues were involved in this for many, many years. Some of you probably know the predecessor of easy instruments, which were called Progress, piloting a lot of issues related to microfinance. And we've developed it into an easy instrument, which I'm not going to go through because I understand that this morning you've already heard a lot about this. But we are great believers in pouring money into something that works. So FC Social Window would actually reinforce already developed and tested instruments so that more people can benefit from them. So we're not trying to reinvent the wheel. If something works, all the better. But financial instruments need to be within a certain context. And this context builds not only the financial capacity, but also the market capacity of bringing people together. This enabling ecosystem is built into this sustainable landscape and has really three aspects. One aspect is making sure that the level of ambition is sufficient. And here, those of you who follow the European news may have noticed that a new structure of political thinking emerged in Rome, 60 years after the development of the European Union, placing the emphasis in a more balanced way across 4 pillars of activity. We have all heard job and growth and jobs and growth and growth and jobs and declined in all possible ways. Today we are talking of 4 pillars of European policy, where job and growth obviously is one, but one is the social pillar, defense pillar, and the global outreach of Europe. And I believe that in the near future you will see initiative pertaining to these 4 pillars coming from the European agenda. The second part is the continued financing on the actual money side, making sure that the euros are there available for people who can put them into good use, but also in technical assistance, through dedicated technical assistance and through EIA, the European Investment Advisory Hub, which invites proposals from people. Proposals can be also marketed to financiers through European Investment Portal. And last but not least, the issue of regulation. I'm not going to say anything about regulation because my colleague knows much more about it. I always have only one wish to my regulatory colleagues, primo non nocere, don't do anything that you would regret coming to this conference in a year's time.
Thank you, Anna. That was very useful. And I think what she said at the beginning, I think this sums up in one sentence what all of us are doing here today and what we've been doing in the past years. And I think it's converting that social fiction into reality. And the reason it's becoming doable in 2017 is because of technology, much as science fiction was turned into reality before us. So I think that was an excellent advice given to you, 20 years ago or whatever. So I think with that, I'll hand over to Piotr, who will talk specifically about regulations and what the European Commission is thinking of doing or is doing at this point in time.
It sounds regulation is the big bad wolf here in this place. Piotr Nowak, I also work for the Commission, but I work for a very, very different, in a different building and also in a different area. So my Director General is responsible for three things. First is the regulating of the financial markets, which means capital markets, insurance, and banking. Secondly, we are responsible for the financial stability and for the assessment of the systemic risks in European countries. And the third is the development of capital markets across Europe. And allow me to start from the last one, and then I will move to the other elements. So the whole agenda of the Capital Markets Union, the CMU development, started in 2015 when the European Commission proposed the action plan. There were several, more than 30 actions addressing very different areas and aspects of the functioning of the capital markets, which were of a legislative but also a non-legislative nature. And the main objective, just to make it short, it was to unlock financing to real economy after the financial crisis. Those who are interested, all the documents are of course on the web pages, but I wanted to speak more about this year, because this year we have undertaken the revision of the original plan based on what we have learned already and what has happened in the last months, or what we expect is going to happen. And I think the challenges or the elements which we expect that they will impact capital markets, the big capital markets, are very much relevant to the microfinance. Because when I listened to this morning discussions, many of these elements, those are exactly the elements which we also have assessed and tried to address. So first of all, if we speak about single market, about integrated market, we also need an integrated supervision. It's not only to have a single rule book, but also to make sure that the single rule book is being applied the same way in every country, in every member state, in every case. So there is a lot of effort to make sure that the supervisory convergence is not only the concept, but also the practical elements. Second, what we have observed is that the number of IPOs since 2008 following the financial crisis, is still lower than in 2008. And some of the stakeholders said it's because we need a special regulatory framework for small companies who wants to be enlisted, either for the first IPO or for the second IPO. And we committed as the Commission under this CMU to undertake the assessment and come with maybe even a dedicated proposal for this particular segment of the market. Secondly, is the animal in the room, which is about departure of United Kingdom. Similarly to microfinance, it's in some areas is 80-90% of the activities. This is UK, and the rest only 10 or 20% is Europe. We have a particular action. We need also more and more long-term investment, and here we have the whole agenda for the sustainable finance, also addressing the environmental, social, and governmental issues. What we also, and this is a bit of novelty, I would say also for us conceptually, is that we realize that small companies will always look for the finance, or several of the small companies will look for the financing locally. So we not only have to care about London, Frankfurt, and Paris, but also have to care about Bratislava, Tallinn, and what's the other capital? Warsaw. Let's say Warsaw as well. Though a few days ago it was announced that it's a developed countries. So we have to have a certain agenda also for the development of the local or regional capital markets, because in some cases it's not possible to develop market only based on the economy of a single country. And the last point is fintech. So fintech is an enormous impact. It's dynamic. It's changing, and fintech is something which allowed, in our opinion, the alternative financing. So you asked this morning, there was a question, is it a threat, or is it replacing, or is it complementary? From our perspective, the alternative financing is complementary to the banking sector, to the capital market sector, and insurance, because we forget about insurance and pension funds, and the life insurance have a really a role especially in the terms of the long-term financing. We see added value, a particular added value of the alternative financing in this part of the funding escalator, which is we have a startup, and this startup wants to grow. And this is where, in our opinion, the alternative financing has a huge, huge role to play. We don't really see the other sectors are really easily able to address the challenge of this phase. Also, I wanted to tell you our perspective, how we see the alternative financing. First of all, it's growing dramatically, year by year, but it's extremely small. We compare it with the capital markets, we compare it with the banking sector. That's really very, very, very small. Secondly, 80% is UK. The rest is France, Italy, Germany, and Nordic countries. So we have geographically, it's very much in certain region. If UK leaves, we speak about the 20% of what is already there. And we refer, our statistics and the ones which we refer are statistics from 2015 when we speak about 5 billion of the whole financing. So I don't know if you have newer statistics which cover the whole Europe, we'll be happy to have it. Then alternative financing is majority is crowdfunding, and within this crowdfunding, when we look at the volume, is peer-to-peer lending. And the last element which we see, and this is a particular concern for us as the European institution, is the very low level of cross-border activities. So now I will move to regulation. What we have, the situation today is that 11 member states has decided to have some certain regime for crowdfunding. As I say, when we speak alternative financing, we primarily mean everything which is crowd. And now we have to take a decision. Should we wait until all member states decide to do something, or should we already intervene and provide for a harmonized approach to crowdfunding? It's a big question. I don't have an answer, but what we as the Commission committed to do is to perform again an assessment. We did it already 2 years ago, and we asked stakeholders, and we heard it's too early. This year, we had a big consultation on a fintech, the European Commission consultation on fintech. I very much encourage you to take part in all of our consultations. We do read what you submit to us. I read myself a big part of the answers, and the situation has a bit changed. So there were different aspects of the fintech, also the blockchain thing, the clouds, outsourcing issues, etc. But when we speak about the investing for the economy and the cross-border, because this is where we, as the European institution, can act, it was about cross-border in the context of passporting and in the concept of licensing. We consider, if we decide, if there is a decision to intervene, it will be always in the context of enabling growth. And that's what I was even asked before coming here to my colleagues, please repeat the word enabling, because this is the mindset which we have. If we do something, this will be to enable growth. It might be limited, it might be only a certain scope of doing this, but this is like a very, very, very important very important for us. The decision will be taken by the end of this year. We are in the middle of the assessment process, and that's all I can say about the regulation. There are no other aspects for the regulatory. At the beginning, I said that my DG does 3 things, and the last thing was the systemic risk and the financial stability. And I have to tell you that, okay, it's a very initial assessment, but given the volume of the markets, we do not consider any systemic risk coming from the microfinancing, which might be an obvious statement, but still it's an element we have to always consider. Because you may not be, probably you know it, financial stability in Brussels is really something which has an enormous importance. So before I give a floor, I don't know if you want to say, on top of this we are very much supporting the supervisory sandboxes, which now are very much in the hands of the national competent authorities or national supervisors. But we also very much encourage the ESMA, the European Supervisor of Market, I forgot what, I don't want the acronym. We very much encourage them to do this. We also have a technical support that Anya was referring to, which if you have a supervisor who has struggles to set up something, they can request technical support from the Commission to set up, for example, a sandbox or to set up a regulation. And there are some countries, I think, I cannot mention the name, but from the northern part of Europe, who have already requested the Commission to help to do this. Thank you very much.
Thank you, Piotr. Again, I think very informative on what the European Commission's perspective is. So at this point, any questions on what's happening in that space? No questions? Any questions on sandboxes?
I would have a question in respect to the, as you pointed out, very interesting to fit the regulations also better to our target group. But I was wondering, how do you really make this happen to the ground level? In particular, what we're seeing, regulations are defined on the highest level on European level with the best intentions, I believe, but with every level downwards, especially with the local implementations, they're getting stricter and more risk adverse, which in particular makes it mostly more challenging, for instance, for us as a bank to finance certain target groups. So obviously everybody thinks, it makes sense to make it stricter, more risk adverse, but what can we do to link the regulations in a better way to support financing for people at the risk of poverty or excluded segments?
I think it's a fantastic question.
Hope the answer is fantastic.
What would be your answer? What is your proposal?
Spoken like a true regulator.
Because we somehow think, or we hope to think that we have done it before putting forward any proposal for any regulation or for any amendment. Okay, I mean, I can tell you, I mean, I can speak for a while about the process of how we define the regulation. So usually it's a lengthy process and it takes 2 years. There is a lot of consultations, there is a lot of stakeholder requests, workshops, etc. We never start from we start from a blank page, but there is a lot of things. So I do really encourage you to take part in and just come to us and tell us what are your problems or what are the things that you think should be there. There is always a revision clause in every regulation. So more or less after we do something 2 or 3 years later, we restart the process. We asked the stakeholders to come and say this works, this doesn't work. 2 years ago, we have undertaken a huge action called Call for Evidence, when we ask everyone for every regulation, please come to us and say, were there any unexpected effects of this? Is there any issue that there is no coherence? And how to say, there were some interesting and proved and evidenced elements that we have taken into account. But maybe it's again time to repeat this exercise and just repeat it. I don't know. It's a $1 million question, and I wish I know. But the best what I could tell you is just be active and talk to the Commission, have a dialogue with us.
I think formulating regulatory or legislative frameworks is a continuous process. It's always dialogue, so they would have a regulatory framework in place which would work for a certain period in time. Maybe then it needs to be tweaked. So yeah, what you said, I think that you should continuously have that dialogue. Any other question?
Cristian Jurma, Vitas, Romania. I have a question also for you. Why, I mean, in Europe we have this idea of the business passport, where you have a company that is registered in one country that can operate in another country without asking for going through the local registration. Why this is not applicable, and this applies for banks as well? Why this doesn't apply for other financial services companies?
But I think it depends, because for payments, PSD2 already foresees this. Are you asking about
payments,
of crowdfunding or investment
microfinance?
firms? Excuse me, microfinance? Why we don't have it? As I said, it's because no one wanted until now. When we made the public consultations 2 years ago, should the Commission intervene and put a harmonized framework for the lending, the answer was no. And it's only this year where the situation changed.
Sorry, the question then is, I mean, is the European Commission proactive, or do you wait for someone to come and say that this is what? One question. The other is, since the UK is way ahead than all the rest of Europe combined, so how much of that outrage is because of the regulatory framework? And not because of the market size, but because of the regulatory framework. Has that enabled the UK to reach out deeper?
There's a very simple question to your answer to your question. It depends. It depends. Everything that's new on the market would need a certain development for us to act. Now, you probably know the joke, but I'm going to say it again. We are evidence-based policymakers. We crunch a horrendous amount of data. We have a very complex process. And the saying goes that a commission proposes like beautiful racing horse. And by the time it goes through all the consultations and discussions and council and parliament with all the amendments, sometimes contradictory, you should be happy if it's a lame donkey for as long as it goes in the right direction. So we do a lot of work, but we also take a lot of compromises. So when you go through a process which includes a lot of consultation, you have to find solutions for contradictory requirements. Plus, there's a fact of life. Life is faster than the European Commission.
Okay, good note to end. So with this, we can move to the lawyer in our panel. And Christoph, as you know, has worked on legislation actually, advised on it, and so he can give a good perspective from that point. But before that, you had a comment on what he had. Please go ahead.
Let me, in my first words, to add something to the answer to this question. I think that the reason is simple, because there is no harmonized regulation of lending activity across Europe. It is harmonized as long as the bank is considered. So you give loans from the deposits, but as long as you give loans from the own funds, it's not harmonized across Europe. And that's why you don't have passport. Passport is when the regulation of certain area is regulated harmonized across Europe. In this country, for example, you hardly need any license if you provide credit from your own funds, not from the deposit. That's why we do not miss passporting across Europe. But if you come from a country where the license is needed for any credit that you provide to the public, then indeed it's a legitimate question. But it's not... Anyway, there is no horizontal regulation of credit granting in Europe, especially in microfinancing. So that's why as long as there is none, there will be no question of passporting. You need to have the directive. Usually it's a directive on any credit activity, and then definitely we'll get passporting inside. Because it's the standard now with the financial service in Europe. But anyway,
Get a banking license.
you can, and then you can even attract the loans from the market. You want to add anything else? Okay, fine. So sorry for this a bit strong introduction. So thank you for the invitation, and now let me share with you some comments on the fintech regulation. I'm primarily a lawyer indeed, and mostly busy with the fintech regulations, both from all the three parts, which is the regulatory and compliance mainly, and Prelex, and our group also is active in the field of business advisory. So in short, I'm the main and primary recipient of whatever Peter writes in his office and leaves it, so I'm the first to read it and later try to apply it in practice if a for ourselves or for our customer. And what I wanted to share with you is some very simple exercise, what actually now the regulation, the impact, the state of play in regulation of fintech looks like. I'm mainly busy with fintechs, and despite I'm connecting fintech and alternative finance, because fintechs and digitization in general is a great chance to each area of financial services, inclusive alternative finance. And let me share with you some thoughts how it at this moment look like. So do the regulations support, so are the enablers clear enablers for fintechs? Sometimes they close the gaps, which is legitimate, but mostly there are barriers. In short, before going into deep diving. So first, is there any case where the regulation is real enabler for fintech? So actually, the only area is at least my approach and how I see it. The only area where the EU, both EU and the national regulators, policymakers in the EU had enough courage to intervene in order to clearly and explicitly support fintech is actually the payment service or the very limited consumer finance services, mainly accounts. Actually, mainly payments and accounts. It's an area where the European authorities and later the national jurisdiction decided that we clearly support. It started all in 2007 with this famous PSD1, where suddenly payment services, accounts, card issuance, acquiring services have become open for non-bank providers. So light touch license, only like 125,000 euro capital, not more than 350,000 euro in case of e-money services. So this is the only area where we have the clear, explicit support enabler from the regulatory side. In 2015, actually it was beginning of 2016, we have even received something more, not only fintech in terms of licensing, but also in terms of competition, pure competition on the digitization level between the non-bank providers of payment services, we are still in payment services, and banks, which is this famous PSD2 interface, or API economy. So under the PSD2, each bank, or actually each operator of payment account, which is mainly banks in Europe still, has to make available to fintechs an API in which each fintech may get, after getting consent of the customer, may get the information from my account, so like providing, and based on this information, provide personal finance management services. So in general, it ensures the data portability. The fintechs can download automatically, without entering into contract with a bank, can download information from my account, information about my account and about transactions from my account. And you can easily imagine how useful is it for credit scoring, for building the profiles of customers. So this is a great news. Each startup, each scale-up in the EU that thinks of financial services, the first question that is being asked is, what can PSD2 do for me? What's the benefit for me? So this is the first and primary and probably the only one, clear support, clear example of explicit support and steering, enabling the fintech in comparison or as against the incumbents brick and mortar payment business. This is a horizontal initiative on the level of the EU. What we see in parallel is the open banking in the UK. So an initiative having the same purpose, that the competition is increased through data portability. This will stay even after Brexit, because what is interesting, it has been an initiative of the UK competition authorities. The competition authorities in the UK ordered 9 major UK banks and North Ireland banks to build up APIs, to share information about customers, to even enable making payments, so building up payment front ends for the customers. So this is about the the PSD2. Do we have another example of clear, explicit support for the fintechs in the EU? For me, it is the account switching in the Payment Accounts Directive. There is a directive of that kind, which says a lot of stuff that each of us has a right to open a bank account, which is clearly visible already. This is a directive from 2014. The deadline for implementation is 2016, and now the results are clearly visible. If you, in the past, like 2 or 3 years ago, if anyone wanted to open an account in a country where the person is not active daily, so has no vocational training, no work, it was really difficult to open an account. Now, due to the Payment Account Directive, which obliges each bank to offer an account, basic account, for anyone that actually has a legal state in the EU, you can go to any member states in the EU and ask for payment account. Again, it improves, it gives a push to financial inclusion, because based on the payment account, you can do a lot more. You are much more credible to credits in the credit scoring process and so on. So the side effect is the account switching principle. So once you have an account, your provider needs to enable you to switch this account, to move this account to any other provider that offers payment account services, and even to fintechs, non-bank. So the bank under this directive has to switch, has to transfer my account to a fintech account provider if that is my wish. So this is second, my famous enabler of and supporter of fintechs in the EU regulation. Then we have some other minor things like data portability in the GDPR, but it is not explicitly addressed to the fintechs. So this is not a financial services directive, so I'm not going to elaborate on it. Then we have interesting case in Poland where it's not purely the level 1 legislation, but the activities of our local FSA that says that you can try to discharge your information obligation towards the consumers through blockchain. It's a long story that both PSD and some other legislations require that the banks provide services on durable medium, while the banks tend to provide the terms and conditions and some other stuff within the home banking facility. Our regulator told the banks, yes, you can try blockchain to fulfill this obligation, and that's very interesting. The second point, the second observation is that the regulation from time to time close certain gaps, but by actually or through actually making it a bit more difficult for the fintechs to operate, but it's legitimate. And the two major areas is money laundering, where the 4th AML directive actually made explicit that anyone that deals with that is the intermediary between the fiat currencies and the virtual currencies is an obligated institution. So it has to do the KYC, has to do transaction monitoring, which is legitimate. I wouldn't object. Then we have some initiatives, which is not the case of the EU, but more of the outside world, which is the ICOs. Most probably you have heard of the ICOs. There is a great run on the ICOs. Recently, China declared it's illegal, or it shall be subject to the same principle as normal IPOs. And this is the two good points, the two legitimate points, or sometimes very spectacular, but mostly with respect to the regulations, we see barriers. Barriers, and this is what keeps us mostly busy if we were all those persons that are busy in the fintechs world. So to give you an example, because there's a whole lot of things you can name a barrier and how to resolve it, but there are really some are really striking, and in this country particularly. So there are some bright examples. So the first one, social lending in Poland. Can you imagine that social lending in Poland is really under huge pressure and cannot develop as you could expect, especially when you compare to other countries? Because in Poland, the fiscal authority, the taxation authorities keep believing and claiming that anyone that pursues that grant loans, that offer loans in social lending, in essence provides commercial activity, which has enormous consequences, because then when the person that pursues offering social lending, so I have some free funds and want to invest just by giving loans to some people I don't know. In the opinion of our fiscal authorities, I operate a commercial activity, I must pay social security taxation, social security like any other entrepreneur, not as a consumer, but as an entrepreneur. It has further consequences that the contract requires a written form, and so on and so on. So the social lending community or industry, from the perspective of the operators of such platforms, really suffers from it and desperately requires kind of attention and support from the local legislation. Then we have the life insurance, another very promising in insurtech area. We suffer here from the requirement that the consent is in written form for certain information, certain data. That's why life insurance cannot be offered in internet mostly. Then we have some more or less painful stuff like outsourcing, which in this country or in many countries actually in the EU still requires a lot of contracting stuff. Sometimes it requires that the liability of the of the insources is unlimited, which is a great pain for the fintechs that hope to cooperate with the traditional banks. And finally, we have usually issues with cloud computing, which is to a certain extent a fundamental thing for the fintechs, because very often cloud computing, due to the banking secrecy regimes, are deemed incompatible or incompliant with the regulations. So this is my personal summary of the state of play. Hope that you see some, that you recognize some issues you have in your daily work, and I am open for discussing if you find.
Well, thank you very much, Christoph. I think that again was very enlightening, especially in terms of where, in your view, I mean, having worked with regulators, what are the areas where the regulators have been more proactive, so they've enabled it to happen, and some areas which are still. And indeed, I think regulators globally, I'm not just talking about the European Union or the European countries, have focused on payments, payment service providers mostly. And I think that's been driven by their agenda for creating cashless economies. But even today, this payments, electronic payments or NFCs, I think one of the lowest places they're used is the USA, despite all the technology. And so it's not really caught up, although the regulatory framework exists on that. So with that, questions? I'd rather you ask the questions than us. Okay, should I? Oh,
so I'm on the board of a crowdfunding platform. It's called Lendehand. And one of their barriers, which they encountered in the last couple of months, is that because of their payment provider, which is a French company, they were required from all their investors, so from all their retail investors who were putting between 200 to a couple of thousands money on the platform, to deploy that through the platform in the developing countries to entrepreneurs. And those investors now all of a sudden have to give their whole actually financial situation in order to be able to continue to invest through that platform. So, which means that first of all, for this crowdfunding platform, it's an amazing amount of work to be able to get those investors to provide their financial income statements and what have you, and your yearly income and your. But also, there is, for a lot of small investors who only want to invest a couple of thousand through a platform, it's for them a deterrent not to pursue this anymore. And I was wondering, we were talking about it the other day, and I was just wondering where this comes from.
But I understand that the business you are referring to is a online lending platform, and I understand that the person that just wants to use their money just to earn some some euros by
yes, and it's a request because of the payment provider. So it's not doesn't have to do with the regulation on crowdfunding. It's because you're using a payment provider. And there are actually, and because this platform works in a couple of countries in Europe, there are actually very, very few payment providers who are able to perform that work. So it's not that they can go to another payment provider. And I just was wondering where this regulation comes from.
Okay, I'm not sure whether this information is 100% correct, but let's assume that it is correct. So the only area or the only case where the status information must be disclosed is where the persons are shareholders in a payment services provider or any other regulated financial institution in Europe. So presumably there must have been something that caused that they had to be deemed the shareholders or dominant persons. So it's very difficult to judge based on those really limited information. But normally in Europe, you are not required to disclose it unless there was the KYC principles in stake. So it was just because of the anti-money laundering. So they might have been, okay, the provider could have made the decision that based on the legislation, but okay, I don't want to speculate. That there are too much available scenarios. We need more information to judge whether it was because of the regulation of the payment services provider set up or because of the KYC you need to apply to each customer of the financial institution.
I think that's something you can take offline. It's a very interesting case, but absolutely. So we still have 5 minutes, so what I'm going to do is ask a question to you, and if one of you could answer it, it's a simple question actually. And if one of you is a fintech. So one of our questions in this panel was, like I said earlier, is should regulators enable alternative finance or fintech? So I think the answer is simple, yes, they should. So what should the regulators be doing is the question. Any one of you. You're a Bitcoin.
No, so what I would just say that I think regulators are pretty friendly to fintech, but banks are not. Like you have this regulator saying, we're ready to regulate this fintech company, but banks just don't bank them. Banks don't enable by simply open bank accounts for a fintech company. And I think that's a clear gap in UK, that the regulator are actually ready to regulate different type of, including cryptocurrency. The banks is not ready to take compliance risk, actually examining the possibility to bank this fintech. And I think if anything further can be done from the regulator would be move the whole industry to embrace fintech rather than seeing, because we're competing in some way or from their perspective and then they just don't want to do it. So I think there's a gap in that space. Yeah.
So actually that's also work for the regulator. I mean, when you're regulating a fintech, and the fintech needs to work with the financial institutions, so obviously there has to be some changes in the financial institutions or the banking act or whatever, which is happening in a lot of jurisdictions because of the fact that regulators want fintechs to work with banks or vice versa. There have to be changes all around. So I think that's the way they can enable it, enable banks to work through fintechs. One, and the other is, there was a lot of talk this morning about partnering fintechs. And again, we talk about change. So one of the questions which I wanted to answer, but I wasn't on that panel, but what's going to happen 5 years from today? Frankly, no one knows what's going to happen. We don't know. Because what we thought was going to happen, and what Bill Gates actually said, someone like Bill Gates, he said, if you recall, I think 2015, he said that banking will be necessary, but banks will not. And today, and we thought that fintechs will take over and all the banks will close and they'll go home. Today, it's not the truth. What is happening is they're partnering because both have realized that they need each other. So how do regulators enable this partnering? And I think that is still an area where we need, I'm sure you've done a lot of work, but I've not seen a lot of regulatory framework wrapped around what should be assessed by a bank in a fintech, and what should a fintech assess when they're partnering with a bank? And how do you wrap around a regulatory framework on that? So maybe for our next conference, this could be a very good topic. And by that time, I'm sure we'll see a lot of examples of fintechs having partnered with banks and doing well. The other thought, I mean, again, since I have the mic, and I have the floor, which I always thought, because we always heard this, again, I may be wrong, that fintechs are unbundling the banks. And we talk about digital banks. So what I think is actually a digital bank is bundling the fintechs together. And you bundle a payment service provider fintech with a credit scoring fintech, with a client experience enhancement fintech, and you have a digital bank. So it's actually bundling of fintechs, which is the new bank, not the unbundling of banks, which is a new bank. That's just my thought. So in the end, what I need to do is actually thank each one of our panel members. So Anna, thank you very much. Gabrielle, Piotr, and Christoph, thank you very much.
Just one little thing, because I'm also looking forward to see what would be the impact of MiFID II ban on inducement and all of the disclosure requirements under PRIIPs on the development of robo-advice, because even today someone mentioned the cost of intermediation, and those are the very, very interesting pieces of regulation that for the first time clients, I mean manufacturers and distributors will be obliged to disclose to the clients ex ante or ex post, depends on which regulation, all the costs involved. And here I think it will have a certain impact.
Okay, thank you. Thank you very much.